Hello everyone, it is Friday, March 14, and today we dive into the euro and the British pound charts to assess potential market movements. The euro has continued its corrective phase, while the British pound has also seen a decline, though its bearish correction has been less pronounced. However, with the pound trading in a sideways range, there is a strong likelihood that its correction will persist. Yesterday's data from the euro area was encouraging. Industrial production across the 20 Eurozone countries grew by 0.8% month-on-month, outperforming expectations of a 0.5% increase. While this report did not provide a substantial boost to the euro, the uptrend remains intact. The US dollar, meanwhile, is still under pressure, fueled by expectations of further interest rate cuts by the Federal Reserve, following disappointing US jobs data, which showed weaker than expected initial jobless claims and slower consumer price growth. This has kept the dollar's upside potential, leaving the door open for further gains in the euro and the British pound. Furthermore, with progress in negotiations regarding the Russia-Ukraine conflict, demand for risky assets is expected to pick up in the near term, supporting further upside in these currencies. Turning to today's macroeconomic calendar, it includes UK GDP growth data for January. The British economy is estimated to have expanded by 0.3% quarter-on-quarter and just 0.1% month-on-month, marking a slowdown from the 0.4% growth seen in December 2024. If the data comes in worse than expected, signaling a further decline in economic output. The pound sterling is likely to face significant pressure and could enter a sharp correction. In addition, the UK is set to release data on industrial and manufacturing production, which is forecast to contract. This could further weigh on the already overbought British currency. Regarding statistics for the euro area, it is worth paying attention to German consumer prices. The inflation rate in Germany is expected to come in at 0.4% in February. In case of stronger than anticipated figures, the European Central Bank reconsider its stance on further easing monetary policy. Notably, ECB President Christine Lagarde recently emphasized that the regulator is in no hurry to cut interest rates. If German inflation rises, this would reinforce expectations that the central bank will keep rates steady at the upcoming policy meeting. Traders will also be eyeing inflation data from France and industrial production figures from Italy. In the United States, the University of Michigan's readings on consumer sentiment and inflation expectations will be focused today. Given this backdrop, there's a high likelihood that both the euro and the British pound will continue their corrective moves in the first half of the day, potentially extending into the US session. Now let's move on to the technical analysis. The 1-hour EUR USD chart shows that a decline followed by a false breakout, and 1.0810 will generate a buy signal, with the euro rising to 1.0852. If the price breaks through and consolidates about this level, the euro could extend gains to 1.0897, potentially reaching 1.0945. At this mark, I would recommend going short on the rebound in anticipation of a 35-40 pip move. Short positions at 1.0897 and 0852 should be considered on a false breakout. In a bearish scenario, if the price breaks below 0810, the euro could dip to 0770 and even 0743. At this level of 1.0743, it would be wise to go long on a rebound, targeting an intraday correction of 25-30 pips. Going long at 1.0770 and 0810 would only be relevant following a false breakout. Meanwhile, the British pound is currently trading within a sideways range, which technically suggests the potential for a continued bullish run. To extend gains, however, buyers need to take control of the 1.2949 level. If the price breaks through and consolidates about this level, driven by strong UK GDP growth data, the volume of long positions would increase, with sterling climbing to 1.2984 and probably 30.28. At this mark, I would recommend going short on the rebound, targeting a 30-35 bip move. Short positions at 29.49 and 29.84, which represent the upper boundary of the sideways range, should be considered after a false breakout, especially if UK data disappoints. The target for these positions would be 29.14. A break below this level would open the door for further declines, potentially bringing the pound down to 28.76 and possibly 28.41. At the level of 28.41, traders are advised to consider long positions on a rebound, aiming for an intraday correction of 25-30 pips. Going long at 28.76 and 29.14 would be prudent in case of a false breakout, with expectations of a continued uptrend. Best of luck to all.